Good morning and welcome back to Almus Market Mornings. We start the week with geopolitical tensions back at the forefront. Iran and US have restarted the kinetic war. The status of the Strait of Hormuz and the MoU remains unknown, and that would primarily be repaying on markets' minds. However, the second order impacts would also be watched by everyone. Inflation numbers by both US and India would be closely watched to determine the rate path for this year. Good morning, JK. Starting the week again in a tense manner, what are you watching out for the upcoming week?
Good morning, Swaraj. It's not been a good start to the week uh, because I think we probably this time we are seeing the highest escalation after that MoU was signed between the US and Iran. Iran saying actually that the strait remains closed until further notice. Although Trump also said that the strait remains open, he's only created confusion but has not removed the market's anxiety. So also confusing was the statement by Iranian official that they are traveling to Oman for taking part in the talks. At the same time, the IRGC had launched a widespread attacks on US bases across the Gulf region in UAE, Qatar, Kuwait, Oman, and Bahrain. So all these, definitely we are seeing the highest level of escalation in recent times, and that's also reflected in oil price once again reaching now almost reaching 80 in the Brent. Something that even the market has not focused much probably was also that Russia's decision to halt diesel exports yesterday following Ukraine's drone attacks on their refineries, and this is also big because um, if diesel supplies are cut off, and also that also impacts the ATF fuel also. It adds to inflation across many products, and this is going to be much more challenging, or rather, it's going to add a lot more challenge for the overall atmosphere, because diesel is a critical input for trucking, rail, construction, manufacturing, and agriculture, all of them. So this is not a good situation for the markets, and hopefully, this it doesn't escalate further in the Gulf region. As I've been saying, I think neither the U.S. government nor the official side of the Iran want a full-scale war once again. But I think my view is that these incidents are going to keep happening, and the market slowly start getting used to it. They have already, we've already seen many such incidents, and then market going haywire up and down. I think that is likely to continue. Some sort of taking in the stride, the market will, recover after the setbacks that we will see, and that is what is going to happen. But we'll have to keep an eye on what's happening. We just cannot be, complacent as well, because it is quite a far-reaching impact of, or if any major escalation happens. Now, on the currency, dollar definitely has got some boost after these events. In fact, on Thursday and Friday, what we had seen was that the dollar. In fact, I think on Thursday we had seen dollar almost drop to the breakout level of 100.50, and we said also that if so long as that holds, dollar will remain strong. And what has happened is with these events, dollar has once again got the support, and it has gone up because now oil price going up means that the inflation is coming down. Even the headline inflation may stop coming down, and again we may see some rise. And already there are other bullish factors for inflation. So that keeps the yields higher, as well as the dollar also very well supported. So euro, we have seen once again break of 1.14. Metals are also taking it on their chin. The recoveries in precious metals, particularly, are getting sold quite heavily. And speaking of dollar strength, some interesting move by Japanese authorities. where they actually gave some sort of a policy move. I wouldn't say policy move, it was actually kind of guidance or moral suasion, calling upon pension funds, which include one of the largest ones to invest in, assets across the world, ask them to invest in domestic assets, giving boost to both bonds in Japan as well as yen, which was trading at multi-decade levels. Their intention is to channel more household and institutional savings into domestic assets as Japan enters a new phase of economic growth. And also, there is a positive interest rate move by the Bank of Japan as well. While immediate action or reaction by yen was to strengthen by about 100 basis points, it has since then reversed to the weaker side. One is the negative news from the Middle East, as well as the belief that the government, though it is giving such a guidance, Japanese interest rates, or rather real interest rates, remains deeply in the negative. And unless the Japanese central bank raises the rates by another 50 basis points in the near term, you cannot expect the attraction of the yields to draw more money back to the Japanese market. So I think, but it's an interesting move because many central banks of late, including India, have resorted to policy moves to improve the currency's weakening trend to be arrested. Overall, I think now dollar remains a bit on the stronger side until these incidents are discounted fully and there is no major escalation. As to the rupee is concerned, so far it has held up well at 95.50 with help from the central bank acting through the PSU banks selling dollars. But the demand also has been consistent at the lower levels. In fact, at the 95.20 itself, we are seeing very good demand. So I think any major escalation, market will try to break 95.70. If not by speculation, by even genuine demand, it can break and we may see an attempt at 96. If 96 is seen, we could see stronger action from RBI. And of course, there could be some new policy measures as well. In the meantime, market is focused on the inflation number from India. A number expected to come at 4.2% from 3.9% last month. So crossing 4% for the first time after 18 months. So it's something the market will watch out, and the components also will be very important. But 4.2% itself is not very threatening. So I don't see it as a policy implication immediately. But then we'll also watch out whether the Gulf escalation happens and then oil prices once again go above 85 and all that. And also monsoon, although it has made up quite a bit in July, whether eventually how the agriculture produce happens and the inflation impact of the reduced monsoon also, whether it is seen in a big way. So these are the factors market will consider. So cautious on the rupee definitely, but central bank action to be watched, and the overall Indian markets also to be on the slightly cautious side on the Nifty as well. Thank you.
Thank you, Rick. And yes, I think globally we start a week somewhat on negative sentiment. It's the highest escalation we have seen since the MoU is signed. But developments are all across confusing. Iran says strait remains closed. US says it is open. Iranian officials are also traveling to Oman to take part in the ongoing negotiation, while Iran also attacks US assets in various of these Middle Eastern countries. So a lot of confusing stuff happening. On the other hand, another development, Russia and Ukraine still are at war, and Russia has in fact decided to hold diesel exports after the Ukrainian attack on their refinery. So a lot of stuff happening across based on this. Dollar has also gained, yields are higher. Euro USD has seen a break of 1.14, and rupee is sort of holding up with dollar selling from central banks around 95.50, but there's also demand emerging around 95 and 95.20. So the geopolitical development should drive the theme for rupee as well. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.